I just bought this Japanese stock. Openwork Inc. is a small cap Japanese company that provides company reviews and employment services. The best way to describe it is as the Japanese Glassdoor, and right now the stock looks cheap. At the latest price, Openwork has a market cap of 20 billion yen, which is equivalent to 128 million US dollars. The company also has 7.2 billion of cash on its balance sheet and minimal debt, which takes the enterprise value down to 12.9 billion. Meanwhile, revenue over the last 12 months comes to 4.4 billion, with 1 billion of net income, 1.5 billion of operating income, and 1.4 billion of free cash flow. So Openwork stock is valued at 20 times earnings, 8.8 times operating income, and 9 times free cash flow. That looks cheap considering the company's growth and future prospects. Openwork is primarily a technology platform that connects employers and employees. The company has developed an 8-point review system which provides valuable data on whether a company is a good fit. Openwork then charges a monthly subscription to users wishing to see reviews and a yearly fee for companies wanting to recruit candidates. The result is a sticky flywheel where more reviews equals more users, which equals more companies coming to the platform looking for staff. And Openwork has also introduced an alternative data service which is used by investment funds looking for alpha. This segment is small but high margin and growing fast. Most importantly, Openwork's KPIs paint a picture of resilient growth. Revenue increased 43% in 2023, 21% in 2024, and it's tracking for 30% in 2025. Operating profit has already hit the company's full-year target. The number of contracted companies on the platform, the number of registered resumes, and the number of reviews are all heading in the right direction. And because Openwork needs minimal capital to run its business, cash is quickly accumulating on the company's balance sheet. A future buyback scheme would help to unlock value for shareholders. On the negative side, Openwork operates in a competitive market and the Japanese labor force is slowly declining due to a shrinking population. The Japanese economy is slow moving and the company also plans to boost its advertising expenses in the next quarter, which may affect future margins. That said, Openwork still has plenty of growth left with only 7 million users out of a potential 70 million, and advertising, if done right, will help to boost growth for the long term. To value Openwork, I use a simple discounted cash flow model that assumes 8% annual revenue growth for the next 10 years with 25% free cash flow margins. Both figures sit below the company's recent averages. Using a discount rate of 10% and a terminal valuation multiple of 15, I get a fair value of $13.25 for the stock, which is 41% above the current price. That seems reasonable. I believe that Openwork has built a valuable and differentiated asset here that lends itself well to future new revenue streams and reliable cash flows. But these are my personal opinions, not financial advice, and I do hold shares in Openwork. And if you want to see more of the stocks in my portfolio, make sure to join my newsletter at 3minutebreakdowns.com. Thank you for watching.